Hi, and welcome back to the Exponential Economy. Today, we're going to go over a company that is what I call a picks and shovels company. They are one of the companies that provides the backbone, the supplies for the exponential economy. Just in the way that picks and shovels were the companies just in the way that companies that provided picks and shovels during the gold rush of 1849 were the ones that really were the only ones that made money. The picks and shovels companies for any new economy are the ones that will most likely succeed. They're the ones that provide the tools for everyone else to make the new products. And the company we're looking at is MarkForged. They are one of the few companies out there that is revolutionizing the way products can be made. They provide a AI-powered 3D printer and composite materials for manufacturing. What's unique about them is, opposed to many other 3D companies that have been exploding lately and supplying the aerospace and healthcare industry, this company makes metals and composites rather than just plastics. So they really are the backbone of what is needed in 3D on a large scale for industrial companies. Their main competitor is Desktop Metal, and I would actually say they're both growing together, that they really don't compete directly. They provide different elements of it. It's going to be really interesting to look at them, especially considering that a few weeks ago, a SPAC company called One, or under the ticker symbol AONE, A1, is going to be merging with them, most likely in the third quarter, but potentially the second quarter of this year. Right now, the valuation is about $2.1 billion. This is significantly lower than the Desktop Metal valuation of $6 million. So it should be interesting to see what they have to offer and how they're going to do it. So MarkForged was founded in 2013 in Watertown, Massachusetts, where they're still headquartered. Now, looking at how they've done lately, I always like to have a baseline of how the stock's doing. They have not gone through the SPAC yet, and most SPACs really go public at $10. So they had a surge when the merger was announced a couple of months, actually about a month ago. But since then, the SPAC market's cooled off a bit. Right now, they're below their 10-week moving average, and this chart is looking on a weekly basis, actually a daily basis, sorry. This is below their 10-week moving average overall, which is their 50-day moving average. And right now, literally, as of yesterday, they're at the $10 mark, which might mean that they're going to have the merger might close soon, but it probably will go public around this and linger at this level. They usually don't go below this until after the merger happens, and hopefully it will go back up. But in the long run, I think this is a very low level to get into, almost the level of a venture capitalist to enter a market that's going to be available to the public. So if you want to get it on a revolutionary company that's going to supply the new economy for the next few years, this actually might be a good time to enter. Even though the chart's looking down or on the stage 4 slope, it should balance out. You might want to wait a few days, but it should balance out here for a while at the $10 mark until the SPAC merger. Now, the Ark Invest is a company that we follow very closely. They are only investing in exponential economy companies, and their autonomous and robotics company, their autonomous and robotics ETF is what we follow closest on this channel. That ETF has invested in A1. They have reduced a little bit here and there, collected a little here and there. But as of right now, they have $21 million invested in the SPAC. So they do have confidence in it. It's a weight of about 0.64% of their full portfolio for RQ. We'll see if this grows over time as the SPAC gets closer to going to market. Now, MarkForged, in explaining what they do or what they are, they have 3 integral platforms that work together to make the whole thing really functional. One is their software, which is an easy to use approach. So that way, for the end users, they don't have to have significant training in order just to come in and design products. They also have revolutionary printers, and also, of course, the material that they have and use is unique to their company. Not many others offer this suite. So for the software, their first software is the Eiger 3D printing software. This enables additive manufacturing. The Eiger 3D printing software enables you to 3D print any part on demand at the point you need. So it's basically, this is the part that enables the actual printing of the material. It shows you how you can print fibers, composites, and metals together, which is never seen really until the last couple of years, and interacts seamlessly with printers. So the other software that complements the design component is Blacksmith, and this enables you the software to monitor and make sure there's quality control as the actual 3D printed item is produced. So this is after design. This is making sure it actually works. So their suite of printers ranges for different use types, ranging from chopped carbon fiber in the Onyx 1 to strong aluminum parts in a Mark II, and all the way up to the Cintar 2, which is more complex metal printing. The unique thing about their printers is that it meets the sweet spot in the market that wasn't met before. Before, if you wanted to 3D print, you either had to have very expensive printers that Stratasys and companies like that have provided that were in the multi-million dollars, and the other alternative was the hobbyist end for plastic printing, and maybe some fiberglass at the very low end. This suite that they have is in the middle price range, which most companies need, and also enables them to have a combination of fiber reinforcement and also metal products, which, aside from desktop metal, there's not many companies that provide this, especially in this price range. As you can see here, there's a wide range of products they use. The composites are carbon fiber, Kevlar, fiberglass for the continuous fiber. Then for chopped fiber, they have Onyx FR for the aerospace industry, and Onyx ESD for electronics, which would be literally 3D printing circuit boards out. And then finally, the metals, they have stainless steel, you name it, that they could do, and along with copper and tool steel. So they can service many machine shops, many industrial shops for larger scale manufacturing. So by replacing traditional manufactured steel and aluminum parts, they can have a distinct advantage. The continuous fiber reinforced composites they have is 25 times stronger than ABS plastic. So it could be used for quite a few things. And the majority are replacing metal parts. So you could see the breakdown that they have here. Aluminum and steel are the main things that are being replaced. Some people are replacing plastic, but you could see that there's a big need for this to be replaced over time. Right now, the market size in 2021 over here is $18 billion for additive manufacturing. And additive manufacturing is the term really used for 3D printing for the industrial set. So the market, as you can see, is going to drastically increase from 18 billion today up to 118 billion forecasted for 2029. That's a 10 times increase just in the next 8 or 9 years. So there's plenty of room for them to grow along with any competition that they have. But the unique thing about MarkForged is that they're not going to the market without a product. They have a strong product, and the product is widely used. So right now, they serve a number of marquee companies in multiple industries. Industrial automation, aerospace, which is probably the biggest right now, military and defense, space, as that's growing. That industry is growing primarily going forward and a little now through 3D printed parts, Healthcare and medical is natural for this, and of course, automotive. And as you can see, most of the key companies in each of these areas are presently using MarkForged's products. So they're well set. They have a good base of customers using it. Most of these companies, once they use one or two trial products, they scale them up, and when they have them, they can significantly decrease the amount of time that the product can get to market. Some examples here are conventional time is 10 weeks. MarkForged allows it to go to 2 days. On top of that, the cost drops substantially for producing those parts. So in terms of reach that they have right now for facilities that are using their product, they have 10,000 right now, which is already quite a bit for the size of the market of how it's progressed. That's quite a bit that are using it. But they expect over the next 5 years to 10 times this to 100,000 facilities using it. And then long-term projections, which you can never really tell, is 1 million. But that's an enormous area to grow into. But historically, they have shown that the company has grown well. They have had hiccups over COVID in the last year, which is understandable. You could see that their revenue is 70 million that they had in 2020 estimated, and which is a little lower than 2019. But if they go back to their historic trends for growth forecast, you'll see that they are going to be going from about 88 million this year into 700 million in 2025. So that is, again, almost a 10 times increase in revenue growth. Now, comparing to Desktop Metal, you can see that for both of them, it's a large market. What's unique is that MarkForged has significantly more revenue than Desktop Metal, even though that they're the company that is in the limelight right now. With over 10,000 customers and 70 million in revenue, they're well on their way. They're not profitable, but they are getting there very fast, most likely faster than Desktop Metal. And as you can see, their gross margins are about 56%. Usually, what I do is I look at a company's to see what its profitability power is, to see how well they can protect themselves in bad time. Gross margin is the key thing to look at. If they have a very high gross margin, that means they have a buffer or a moat around most of the competition and their products in high demand. With this type of gross margin, they should be able to weather both good and bad times for the foreseeable future. And finally, the market capitalization. Desktop Metal's market cap, before the recent downturn, might be a little lower now, was 6 billion. The MarkForged capitalization is 2 billion. So even though they have stronger revenue, much stronger installed base of customers, their market cap is a much more affordable level in Desktop Metal. I think that this presents an opportunity for investment. So MarkForged is really an interesting company. It's the technology that will probably drive the future of many of the industries we looked at before. I think that while they have an expensive market cap overall for going forward at an initial public offering, I still think that there's enormous growth. There's just upside for this industry in many, many areas, and the price is really worth getting in at this point. Ark Invest is in there. There's a lot of there's going to be a lot of interest in this over time. So if you're looking at getting into a company that will balance out your portfolio with the tools and sort of the back end of the flashy front points of the new exponential economy, you might want to look at MarkForged. I'd like to hear what you think about it, and I look forward to going over other exponential economy topics in future videos. Thanks.